Few technical difficulties. Welcome to another edition of your Columbus Urban League Minority Business Assistance Center business-related education programming. I am excited, just so excited to bring a friend to the small business community, a mentor, and really just a servant leader to what we're doing here, especially in the Columbus area. Miss Sandra Moody of Insurance Agency is going to talk to us about the basics of understanding insurance and bonding for our businesses. Sandra, go ahead and turn your screen on so we can see your beautiful face. Hey girl, how you doing?
Hello and good morning, everybody.
She really doesn't need any introduction, but we were chatting just briefly before the start of the webinar about some news that came out regarding Russell Westbrook. Russell Wilson and Sierra have teamed up to create an insurance program that's focused on the needs of the minority certified business owner. We don't need to go look for celebrities because we have a local celebrity right in our midst that has been doing this for years and making sure that we are informed, educated, and properly insured for our businesses. So Sandra, thank you again for being here. I'm going to dark my screen and let you take over.
Well, thank you so much. I just appreciate the work that you guys do at the MBAC office through the Columbus Urban League and all of the expert and professional team that you guys have. Y'all have supported me for a very long time. And what you may not know that I was a client of the Minority Contractors Assistance Program back in the 80s when I really got going in my business. So you've been valuable since that time to me and influential. So good morning to everybody who took the time to participate in this webinar. It says a lot about who you are and that you are stepping out to gain information to make yourself personally better, as well as the growth and development of your business. What I aspire to and what I've learned a lot about is learners are leaders. So those people who take the time to invest in themselves and invest in their businesses really have a competitive advantage. So we've been around Dishonesty has been around 23 years. I've been in the industry more than 3 decades. And really a lot of my work has been helping to protect and grow assets for small businesses through the use of insurance and insurance strategies. So we want to make this kind of interactive. In the short time that we have, as you can imagine, there's a lot to talk about in insurance, and we could drill down in coverage items, for days. But I'm just going to give you a brief overview of the most common insurances that most businesses need. And we want to make it interactive. So Janine will be managing the chat if you have questions as we go throughout. And also we're going to start just kind of getting a feel for who you are out there. Unlike us being physical where we could see you and ask you to raise your hand and communicate back, we're doing it digitally and virtually. So we're going to have some poll questions. Just feel free. We'd like everybody to engage and respond. And then we're going to talk about some of those responses as we go through the session today. So Janine, whenever you're ready to trigger the poll questions. So here we just want to get a sense of what industry you're in. If you're thinking about starting a business or if you are in business already. Just click which industry you represent. And if your industry is not stated, the last item there, industry not mentioned, click that, but also note in the chat what specific industry you are so that we can capture that information. And what I like to do is kind of tailor my comments based on the industry or the type of businesses that we have in the audience. So feel free to check those. And Janine, I don't know if I can't see responses, so let me know that things are coming in.
I can see, and I see 0 of 4 of our participants have voted. So, yep, here we go. Here we go. Yeah, don't be shy, guys. This is the time to get in front of the expert. Okay, come on, the other folks.
Yeah, and you're doing this anonymously, so we don't know who you are, who's clicking what. So feel free to just share your thoughts here. And again, it's helping us continue with the learning, and all of us are growing from this information.
If you have a question, please put it in the chat for me. That would be really helpful. We're going to go ahead and roll down to question 2.
Yeah, we'd like to get a sense of who in the group currently has business insurance. Data shows that about 40% of sole proprietors do not have any business insurance. One of the sessions I did recently, the number was 67% of the audience did not have business insurance. Now, what I don't know is how many of that group actually were in business, or they were still in the development phases.
Okay, and let's go on into question 3.
All right, so we had a restaurant owner who one of their customers was there enjoying a great meal, found some glass in their food, and didn't communicate that with the business owner. But later, the business owner got a letter from their attorney stating that they had been sued and filed a suit against them for medical bills and lost wages. So it looks like we have a couple people responded.
Looks like liability and business income.
All right, any other? I mean, we only got 2 respondents.
Yes.
We got
somebody's having some technology difficulties, so there's that.
Okay. So the correct answer is liability insurance. So what we're going to talk about is that's the primary coverage everybody needs, that pays if you have anybody is harmed or anybody's property is damaged in the course of you carrying out your business. So the fact that you have a restaurant, if somebody gets sick from your food, that general liability is what pays those medical bills and lost wages. And we're going to talk further about that.
Okay, and question 4. Oh, now they're ahead of us, Sandra. Got a couple of answers there.
So this one really starts to look at remote workers. If you're working from home, if you have employees for working from home, and you know, almost half of the population now is working from home. And this is actually a true story that I read somewhere. A individual uses their ironing board as their desk, and the dog ran by and cracked the laptop, couldn't function. So what pays for to replace that laptop? So and the question goes to who owns the laptop. Do you as the individual or employee own the laptop personally, or does your company own that laptop? Is it corporate owned? So property is the correct line of coverage that responds, but which policy responds? It could be your homeowner policy. When I say homeowners, I mean renters, condo, residents, all of those are captured under the word homeowner. But if you personally own it, it could be one of your personal homeowner policy, or if the corporation or your business owns that laptop, it would be that corporate policy to pay.
And the last question, looks like people have answered there as well.
Yep, so this was a retail store damaged due to some of the protest. The business owner not only had damage to their window, they also had inventory and property stolen. So the property coverage would pay for the window as well as merchandise and inventory. And if they could not open that business for, let's say it took a week, so they got lost revenue, you could purchase or have business income that will pay that lost revenue. That business income also pays employees. They can't come to work, so it pays fixed and ongoing expenses. So if you got leases, if you have payroll, as I mentioned, overhead cost, business income will pay that if you can't operate your business due to a covered claim. So property and business income will respond in that case. Very good, very good. Are you able, Janine, to share what industries people are in?
There were two that indicated no industry, and I don't see their information in the chat. And it could be that they were having, again, some problems. So if
Okay.
you want to, I know that somebody wants to schedule some time to work with you. If other people want to go ahead and put information in the chat during the presentation, I will make sure that your questions are addressed.
Okay, and then you'll forward that. We'll make sure that information, I get it and reach out. Awesome. Well, thank you for participating. And Janine, I'll hop in and share my screen now. So I'm still seeing the poll. Oh, there we go. Okay, I'm going to share my screen now. Let's see here. All right, so we'll hop right into this thing. So one of the things, you know, as we talk about insurance, I always say that people spend a lot of money for insurance, but very few understand it, right? And you don't want to learn it at claim time. When you have a situation, you don't want to learn what you're covered for or not covered for. So one of the common myths here is that if you have a home-based business, you don't need business insurance. But the reality is that you have the same kinds of exposures as you would any freestanding business. So essentially, something could go wrong in your home-based business just because you operate from home. And then we're seeing that because now with all these remote workers. And then generally, your personal policy doesn't provide you coverage for business risk. So I mentioned earlier that potentially your homeowners, renters, condo policy could provide coverage for that laptop that was stolen or broken. Those personal policies may give you a couple $1,000s of business property coverage. So if you're a sole proprietor and working from home, you may be able to endorse or enhance, expand your homeowner policy to pick up some of your business liability and business property exposures. You have to have that conversation with your homeowner agent. And then the last one I think is most important. You can't buy insurance when you need it. You can't buy homeowners when your house is on fire. It's a strategic planning tool and you have to have it in place before something happens. So I also teach insurance at Franklin, which was mentioned, and I just kind of like to give the foundation of insurance. And what is insurance, right? And it sounds like a silly question, but people think they know what an insurance is, but we find many really don't. So a couple of these key things, it's a transfer of risk. So, and that risk is just another term for calamity or something going wrong. So you as the business owner, as the breadwinner of a household, you're just passing that risk on to the insurance company. You don't have to take responsibility for it all. However, you share in that risk, right? So if you think about your automobile policy, what's your share of the risk called, right? If your car is totally destroyed and the insurance company is paying to repair or replace most of it, but you have a piece of it too. Does anyone know what your share of the risk is called? And I can't see the chat responses, so Janine, you gotta help me.
I'm here for you. I think they're just lost in the sauce right now.
So anybody heard of the word deductible? So your deductible is your share of the risk. The larger your deductible, which means the more you're paying in that risk, the less premium you pay the insurance company, right? So that's the risk sharing. You share more by having a higher deductible. Instead of a $250, you got a $500 or a $1,000 deductible. You pay that first, and the rest is shared with the insurance company. It's a risk sharing approach. And insurance is one component of the risk management process. So you think about what could go wrong in your business. And I wasn't sure, again, of the different industries that may be reflected in our audience, but you are the best person to identify what things can go wrong. Would you guys want to just kind of, again, drop in the chat based on the industry you're in or what you're thinking about, what could go wrong in your business?
I know we have one participant that's in retail, for sure. So I've just posted that question again. What industry are you in? Don't be shy, guys. This is the time to let us know.
So think about the poll question. You just happen to be in a nice retail space where the protesters came through. Actually, after the protest or right during that time, we had our office broken into, right? So you can do all the right stuff and still be in harm's way. If you think of, let's say you're a contractor and you're a painting contractor. So the bucket of paint falls on the furnishings of that customer. So now you got paint all over their custom oriental rug, on their couch, right? So, you know, a whole lot of things could go wrong. You can have employee theft. You can have someone hack into your system and you've got a totally digital online business, right? So there's a lot of things that can go wrong. Everything, though, may not require insurance. So the insurance is one strategy under the risk management component. So other strategies may be employee training, right? Employee handbooks. If in terms of fiscal management, you may require 2 people to sign off the checks. Maybe a different person makes the deposit versus the person who reconciles the account, right? So you can establish some protocols that lessen or negate risk. And that's what risk management is. It's not just insurance. Insurance is one strategy. And you really have to spend time looking at how do I establish some systems that lessen the exposure of risk happening.
And then you have a question for clarification. I believe our retail business owner asked, do I understand you correctly that if I have a home-based business, only my homeowner's insurance can cover it?
No, you may need a business policy to cover it. What I'm suggesting is some home-based businesses can obtain coverage on their homeowner policy if that policy, if the insurance company allows it, and then if that policy is endorsed or expanded to include office and home or retail at home. So it just depends on the nature and the industry of your business. If you have a lot of customers or traffic coming through, most homeowners are not going to cover it if you have a lot of traffic coming through. But if you're a consultant or IT person that works at home on a laptop, you're likely to be able to expand your homeowner's coverage to pick up your business risk. And then you don't need a separate business policy, right? Because you're essentially expanding your homeowner policy to now include your business. Not every industry, not every insurance company will allow you to do that. So you really have to speak with your broker to make sure that can happen.
Okay, excellent. And just to let you know, we have people here from construction, alternative healthcare, and in the social service industry. So you've got a good mix.
Excellent, excellent. In the last 2 bullets there, insurance is designed to restore you to your pre-loss status, where you were before the loss occurred, to indemnify you or to make you whole. And it is a tool to protect assets and to protect income. That's what insurance is designed to do. So these are the key areas. We're going to kind of touch on each one of these briefly this morning, but these are the most common coverages that most businesses need. And depending on your industry, depending on if you have employees or not, how your business operates will determine if you need, which of these coverages you need. So general liability is the most common. And again, this pays if someone is harmed or someone's property is damaged, just naturally in the course of you doing your work. Professional liability is for those who provide advice or counsel, design work. So insurance agents like myself have to carry professional liability. You also see this called errors and omissions and malpractice insurance. If you have employees, there are some specific employer-related coverages that protect you from claims from employees. If you don't have employees, you probably don't need those coverages. Property coverages we've talked about earlier. Property insurance is designed to repair or replace. Real property is the structure, the building, and then personal property is everything else. Anything that moves, furniture, equipment, inventory, anything else is captured under personal property. And then the last bullet, data breach and cyber liability. We're seeing an increase in data breach claims since we've been working remotely in the pandemic. So what is commercial general liability? Every business needs this line of coverage. This protects your customers. And as it says here, it'll pay the sum that the insured becomes legally liable or obligated to pay as damages because of injury, bodily injury, or property damage. That just means somebody is physically harmed or hurt in somebody else's property. In addition, the insurance company has a duty to defend, which means they provide you an attorney. So your general liability also provides you legal defense coverage. So you don't have to go out and find an attorney. Your policy provides you an attorney, right? And they work on your behalf. The last line there, defense costs inside or outside the liability limits. So you generally may have heard you need to have at least $1 million of general liability. That's kind of baseline, right? And just starting out, people say, well, I only want 300,000. I mean, literally $100 more, you can have $1 million. So it's not double. Premium is not double based on the amount of coverage. But the defense costs can be a part of that $1 million or in addition to that $1 million, right? So when it says defense costs inside the limit, that means that $1 million includes the defense as well as damages, medical bills, lost wages, what have you, that would be paid to that victim. Defense outside the limit means you have your $1 million plus unlimited legal fees, right? So preferably you want your defense costs in addition or outside of the limit. Depends on your policy. If you get the choice, you want it outside the limit. Any questions on that? Janine, you monitoring that, right?
I am monitoring. I am here, and it looks like folks are acknowledging that they need to speak with you. So I've got a contact information. Okay. I hear you, Andrea. We will make sure you connect with Sandra for sure.
All right, y'all. Thank you. I look forward to talking to each of you. So here's some other liability coverages. When you hear the word liability, it really just means lawsuit coverage, okay? So I mentioned professional liability. Again, these are people who provide advice, service. These could be architects, engineers. We're even seeing it in the education space for teachers or childcare workers, home health care aides, medical malpractice. But anytime there can be a risk of negligence, inaccurate advice, you just make a mistake or you leave something out. You may have all the best intentions and still something can go wrong. So that's what that does. The umbrella coverage gives you broader limits of coverage. So I mentioned on general liability, most people will have $1 million. So let's say you got a contract with the state of Ohio and they want you to have 5 million. So you would pick up $4 million in an umbrella or excess liability. So that umbrella sits on top of all of your underlying policies, very much like a personal umbrella for your home and auto, a boat, etc. The personal umbrella sits on top of your personal policies. If you manufacture or sell a product, you would need products liability. And this again pays if someone is harmed by your property, if there's some defects in it. We're working with some small businesses that are manufacturing a skincare line, right? So that's where products liability would come in. If you manufacture a food product, same thing. Liquor liability, if you host events, if you're an event planner, if you're a restaurant owner and you sell alcohol, this coverage is important to protect if there's any claims due to someone being intoxicated and hurting someone else. In abuse and molestation, we're seeing this in a variety of spaces. If you work with young people, any youth groups, as well as senior citizens and elderly groups. Anytime there's a lot of intimate contact with those vulnerable populations and age groups, that's where you see molestation and abuse liability needed. So again, depends on the nature of your industry, what kind of work you're doing will determine if these coverages are necessary.
Here's a question from our audience. Can multiple coverages be included in one policy?
Great question. Yes. Depends on the carrier and depends on the industry you're in. But ideally, that's what you would want to do. Bundle as many of these coverages onto one policy. And that's commonly done. Good question. If you have employees, if you have a board of directors and officers, liability protects that board. Employment practice we're seeing this became a lot more relevant during the Me Too movement. So any acts where you're accused from wrongful termination, sexism, ageism, a variety of wrongful acts from employees suing employers, right? So be mindful that these coverages are not covered on your general liability. So that's why you need multiple and different coverages to respond. Employers' liability and Ohio stopgap works with workers' compensation. And in Ohio, we're a monopolistic state, which means the state of Ohio runs the workers' comp program. If you have employees who live in Indiana or Michigan and work in Ohio, you would have to purchase workers' compensation coverage for those employees in those other states. So that's what employers' liability does. It works alongside workers' compensation coverage. Benefits liability really protects if there are errors in administrating the benefits of your employees. So if you had offered group health insurance or disability and an employee didn't get properly enrolled timely, and they had an accident and they're not eligible for the coverage because your administrator didn't add them on. I mean, again, things happen when we're all trying to do the right thing. And then crime and dishonesty, this is employee theft from the employer, but also could be third party if you have employees working on the job site of your customers. And then they're accused of stealing items or merchandise, but also information, right? Fraud, etc. So again, it protects the business and the business owner from the acts of the employee. So key thing here, if you have employees, that's when these kinds of coverages become important. If you do not, they may not be applicable. A variety of property coverages. One I want to mention is property off premises. So because there are more remote workers because of the pandemic, your property coverage, you may not have enough property coverage that is off-site, right? So if you think of business property, if you have an office, your personal property is for those furnishings and desktops and computers, things that are stationary in your office. But off-premise is if you have property that is maintained or moves around. So you want to make sure that you have adequate property off premise as well, and particularly now that we're working remotely, and we're seeing that people be inefficient in that area. One of the other keynotes on property is the bottom there. Property, how is your property valued? It's either valued as replacement cost or actual cash value, and this is true for your personal insurance as well. How is your homeowners and your renter's property valued? So I'll toss that out if anybody knows the response to that. What's the difference between replacement cost and actual cash value? And
Well, I know the answer, Sandra, but I'm gonna let everybody else answer. In the meantime, there's another question. A business owner does not have employees, but they have contract workers. Do they need to cover them with insurance?
Very good, because a lot of people assume their insurance extends over their independent contractors. So if you're generally the answer is no, because as their independent contractor, that says they're independent business person, they should have their own coverage. Your business insurance policy does extend over your employees, but depending on your industry. So if you're in construction and you use subcontractors, you can include those subcontractors on your business policy. However, the insurance company is going to ask you, does that independent contractor have their own insurance? Are you collecting evidence of that own insurance? Do those independent contractors name you as additional insureds on their policy? Because that means if they're working for you, their insurance policy now protects you if they're responsible for the claim, right? So generally, independent contractors have to get their own insurance and they're not covered on the business policy. Depending on the industry, they could be, right? But they still are required to have their own coverage. I know that's a lot in there, but I like to say generally no, because just by nature being an independent contractor, you are an independent business. And unless you want to take on the risk of that subcontractor, most of us do not. Good questions. All right, so the difference between replacement cost and actual cash value. Janine, did you want to share?
Oh, you kind of stumped the teacher. Okay, sure. Replacement cost has to be what is the cost to replace that item at today's pricing. Cash value has to do with the, what's the word I'm looking for? The depreciated value of that item at that time.
You got it. Perfect. Perfect student, you get an A.
I am an overachiever.
So you need to know how your property is valued. Because again, you don't want to learn at claim time that you're getting actual cash value, because you're getting what it's worth, not what it costs to replace it. That's a significant piece to know. Business auto functions like a personal auto policy, but you have generally larger limits. The bullet on the bottom, higher non-owned auto, extends your business coverages onto your employee's vehicle. If they're working, doing doing an activity that work related and have an accident. So your business owner policy extends on top of their personal auto policy. They may be doing an errand for you or going to the post office, etc. So hired means any leased vehicle you don't own. Non-owned means any vehicles used that happens to be used on company business that's not owned by the company. So again, that's another coverage we would highly recommend. Cyber and data breach coverage. This is relevant if you maintain what's called personal identifiable information, PII, or PHI, personal health information. And there's two ways hacking or these breaches occur. One is from outside, a hacker, and then the other is inside, which is employee error or misuse. These are just examples of PII. You know, you may do transactions online, and you may store your employees or those contractors' information. That's the data that we're speaking of here. These policies have become much more comprehensive. So they do everything from providing credit monitoring to those who have been harmed, to forensics, so you can figure out what happened, ransomware, if your information is, they call bricking, where someone just blocks you out of your data and they require a ransom to be paid in Bitcoin, right? So these policies provide you that kind of protection. They provide you really an IT consultant. So you can kind of keep doing your work and you have a professional figure out what the heck happened here and how can I get my business back going and get my information back. Business interruption, if you're shut down because of a breach or a hack, again, there's potentially lost revenue. So that lost revenue can be replaced. And there are a lot of state penalties that businesses incur due to the compromise of their customers' information. So this is becoming much more relevant. We're seeing an increase in cyber risk, primarily again due to remote workers, because many of the firewalls and the security that we had in the workspace is not as secure in the homes of these employees. So this is an important coverage to consider. And then just kind of expanding a little on that remote worker, you want to look at, as the business owner, right? What is my customers? Are customers coming to that home? What's stored there? Would you lose money if there was a claim at your home? Let's say there was a fire or damage to your home or theft, right? Could you lose business because of it? So how are records maintained? These are things that you just got to run through as you're assessing the risk of those employees who are working remotely. And these are just some guidance that's being suggested. If you're the employer and have that employee working at home, you need to see what that workspace looks like. Is there a designated space, or is it on their bed or on their ironing board, right? Where's the coverage? Is it coming from a homeowner policy or is it coming from a business policy? And create some policies around a remote worker in a workspace. So again, it's starting to be much more relevant because such a large percentage of the population is working from home. And we hadn't really thought about this risk. So I think I'm gonna stop right there, see if there's any questions on the insurance topics, but then shift just a few minutes to talk about bonding.
No new questions so far.
All right, and I know I'm going pretty quick because of our time constraints, but bonding is the other area. This comes into play if you're doing any municipal work in large private sector, because many times large corporate private sector asks for bonds. So what is bonds? A lot of people think it's like insurance. They bid tomorrow and they call the day to get a bid bond. And sometimes it just doesn't work that way where you could do a car insurance policy like that. So a bond is a three-part relationship. The obligee is the contract owner, the principal is you as the business owner, and the surety company. In essence, the surety company is co-signing for you as the business owner, saying that you will satisfactorily complete that contract based on the terms of the contract. So they're pledging to support you. So some key differences, and I know we don't have a lot of time to drill down into these, but one of the key differences is when we go down to subrogation. So subrogation is just another term that means reimbursement. So in insurance, if you had a claim, the insurance company pays or replaces that item or pays those medical bills, and you share your costs with your deductible. On surety or bonding, it's an indemnification. So if the insurance company has to pay out to finish that contract because you defaulted and your bond was called, you have to reimburse the insurance company for any of the expenses they paid out on your behalf. So that's what makes the underwriting of a bond really tricky, right? Because you have to reflect that you're credible, you have the corporate and personal resources, and that you have the skill set to satisfactorily complete that project. So it's not, as we said with insurance, it's not risk sharing, it's more like credit, right? So that's a significant difference. And oftentimes, I think people get a little hung up thinking these things are the same. Though insurance companies write the bonds, the insurance is quite different from bonding and surety. So there's a lot of different kind of bonds. If you're bidding, doing, like I said, doing municipal work, they usually want contract bonds. A bid bond, kind of like earnest money, that's usually a small 10% of the total job amount. And you're pledging that if you are successful winning that contract, your bid bond in Ohio converts to a performance bond and a payment bond, right? To really all the other remaining bonds. So if your bid bond says that if I win this contract, my bid bond now becomes a performance bond, payment bond, a supply bond, and a maintenance bond, right? It does everything. That's unique for us in Ohio, because some states you would have to be underwritten for the bid bond, which is only 10% of the project. And then once you win it, go find a performance bond to be underwritten for the whole job. So we don't do that in Ohio, which is a blessing. However, there's much more scrutiny in underwriting on the bid bond because you're literally being underwritten for everything. Where they're underwriting you as if you won that project. The other ones depend on the industry, like the license and permit bonds. Every little municipality around Columbus requires a $10,000 or $20,000 license or permit bond. There's no real underwriting on that. You know, they're $100, $150 a year, but literally, you know, Dublin, Whitehall, Reynoldsburg, every community requires you to have a permit bond or a license bond. If you're on a retail store, you're doing money orders or the lottery, the state requires you, again, to have a bond that says you're not skipping out with, you know, the lottery money, or you're not being fraudulent with money orders. One of the other ones I mentioned here is a janitorial service bond. If you work in the janitorial space and your employees are on your customer's work site or in their offices, if their employee, if that employee is accused of theft of your customer's items, that's what that janitorial service bond provides you protection for. So there's a lot of different type of bonds, so it's important to understand what they're asking of you. And I know I'm moving kind of quick because we're getting to the end. I did want to share here we work with a lot of different surety companies, just like we do a lot of different insurance companies. So you can get pre-qualified for bonds. If you know you're going to work in the municipal space and bonds are required, we've got some bond programs where you're pre-qualified. The one is up to 400,000. If you bidding jobs under 400,000, you've been pre-qualified, you know you can get your bonds there. But if you're bidding projects that are in excess of that, you would do a full bond line, and the information on the bottom is required. So the same thing, you're establishing almost like a line of credit, you pre-approved for a limit, and when you need a bond, you just submit the scope of work and the bid bond requirements to get that bond requested.
Oh, we've got a question. Let's get into it here. What do you think about D&O policies, and how much coverage would you recommend?
You know, I'm like $1 million base on most of these policies. D&O is important because those boards of directors are generally serving and providing their expertise, but they can be held personally liable, right? If that company is sued, and it goes all the way up to the board of directors. So I think whenever there's a board, it's critically important to provide that coverage. And it says to your board that you care about them. You know, we're going to protect you in case something, you know, goes wrong in the business, but you won't run the risk. So yes, I think it's critically important.
And for those of us that don't know what D&O means?
Directors and officers liability.
Thank you.
We got a lot of acronyms in the industry, so. All right, just switching quickly. You may have heard that President Biden's executive order reopened healthcare open enrollment. So those people who do not have health insurance can now obtain it. It's opened up February 15th and going to May 15th. So many people in our community need health insurance and don't know that this is available. So we encourage you to share this information as well. And we can assist people in getting enrolling in coverage. So that's important. And we want to spread that message. Just kind of wrapping up, some key things to think about. You want to understand your coverage. As you said, as you can see, there's a lot of moving parts to insurance, and insurance is customized to your personal or business needs. So you really want to work with a professional who can help you understand what you do and then make proper recommendations. You guys, somebody mentioned about comprehensive policy. Certainly, as more coverages you can pile on the one, the more efficient it is, more cost effective it is, and at claim time, you know, all those different coverages can come into play. It's a lot easier to manage. Position them for the maximum tax advantage, which just means if your company pays for your business insurance, that's a tax deductible business expense. If there are other coverages like medical insurance or key person insurance that benefit the key person, and those can be positioned where the corporate checkbook pays for it, you may get some tax advantages for doing that. So really work with your accountant to make sure you're taking the maximum tax benefits. And as I mentioned, think about protocols that minimize risk. So take some time to understand what can go wrong in your business, understand what you do, and then not only look at buying insurance, but what other strategies can we employ? Think about sharing more of the risk with higher deductibles. If you're doing municipal and large private sector work and you know you're going to need bonding, get a bond line set up before you bid, right? Because it takes a few days, a week maybe, to establish these programs with all of the underwriting. So you don't want to have a bid date and then can't get your bond timely enough to make that bid. as you grow and maybe expand to ancillary services, make sure those new services are covered in your policy. Because you may begun doing, just as a barber, but now you're doing facials or hair or nails and pedicures. So make sure that your policy evolves and moves as your business does. And always plan a time to review, because what you're doing today, it can be different 2 years from now. And you want to make sure your policies kind of keep up as you grow and expand. So that's all I have. I know that was a lot of information. I'm excited that some of you guys want to talk further. We are here to do that. My phone number and email is there. But pretty much all the coverages that I mentioned today, one of myself or one of our professionals here can work with you to help you get your needs met in this insurance area. So thank you again to the MBAC team for inviting me. And I'll entertain if there's any other questions at this time as well.
Absolutely. Sandra, you just brought so much information that's going to help us with our businesses. We titled our new curriculum Driving for Growth because we are all about helping businesses scale up and grow bigger, even in the midst of all of the things that we've experienced in the past 11 months. And I think sometimes we forget or fail to realize that the things you're talking about are all about growth strategies. You can brand your insurance coverage. I'm insured and bonded at this amount on your capability statement, on your website, on your other marketing material. And that makes you appear to be a much more reliable and trusted business in the small business space. And that's going to bring you more business, right? Would you agree with that?
Yep, I do. And when you talk about building those websites, the insurance companies go look at those websites. They go out on social media to understand the business. So if you've got 10 things on that website and you do 2 of them, and then when we come back, it says, well, you're doing, these 3 or 4 other things. They say, well, I'm not doing that. I said, well, but your marketing, your brand says you do that. And so we got to insure for that, even if you're not doing it, or you need to remove it from your branding, right? So people don't think about that. And we've run into challenges where you don't want to be everything to everybody. You just got to figure out what your niche is and hone in on that niche. But certainly when your customer asks, can you provide an evidence or certificate of insurance? You want to be able to provide that. And again, you can't call and say, I need a certificate of insurance. You have to have insurance in place to get a certificate of insurance. Right.
Absolutely.
And we had that call. I just need a certificate. I said, well, you need insurance first. Okay, to back up the certificate.
Right. And for our construction people that are going after those municipality contracts, you may need to increase the level of your bond to be able to take advantage of that bid. Even as a subcontractor, there may be some expectations around that. So we just want to build a bridge between what you're doing in your business and the insurance industry and realize this is an ally and a partner that you must have. So build that relationship, reach out to Sandra. As you can see, she's approachable, she's knowledgeable, and she's not going to do anything to hurt you. She's only here to help you. One question we have here is, how do carriers think about ownership versus insurable interest? For example, if you have policies that cross related legal entities with slightly different ownership structures.
Yes, so we see that often. So you can add multiple business entities on one policy if it's common ownership and if it's common industry, right? Because if that other entity does something vastly different, that you may need a separate policy for that. But if it's similarly aligned in related industries, we do encourage that because it saves you money to get multiple entities on one policy. So, common ownership is the key. Are the owners all the same players, in there? So that's the key. Insurable interest, if there's insurable interest, there has to be insurable interest, I guess is what's important here. So there has to be insurable interest, which means there's the potential of loss, right? You have some financial investment in this entity. So that's therefore you have insurable interest. So certainly common ownership, insurable interest, they both play a significant role. But in terms of marrying them on one policy, really goes back to the industry of those entities, right? That they're doing something similar and that policy aligns. If not, you might need multiple policies.
Awesome, awesome.
Good question.
Well, I appreciate you. It looks like the audience appreciates you and what you've been able to do for us today. Our time is nearly up, and I just want to say thank you again, everyone, for tuning in to MBAC Programming, to our wonderful presenter, Ms. Sandra Moody, for bringing the fire today. Know that we will have this recorded, and we'll probably get it in your inbox by Monday, so that you have this content to go back over again and again. Thank you, Sandra, and thank you, everyone. Have a wonderful afternoon.
Thank you, everybody. Thank you so much.